Globalization and internationalization often brings up very interesting points. However, when I hear that GDP growth is always good, I often take a step back because what I have been taught is to always think deeper. And I will show you by the end of this video exactly what that means and how to do it. Hello and welcome back to the Travel Report. Today we're talking about real GDP growth versus an economy that is overheated, that is growing as a result of debt and realistically borrowed time. Oftentimes when the country of Georgia comes up, there is a large push to say, look at the GDP, look at public debt. Oh my gosh, Georgia is amazing, it's fantastic. And while some of that is true, Georgia has, for instance, a 38% debt ratio. However, I'm not interested in whether or not Georgia has a 38% public debt ratio, as realistically, who are the ones loaning them that money? It's predominantly Russia and China. So that means what? Dollar-denominated loans in high interest rate environments. And so this means that even though the loans aren't public, which many of them aren't, you can almost guarantee that most of Georgia's loans are structurally higher interest rates than what would be seen in other countries. Let's take the US for an example. The loans on the bonds that the US has, which we print bonds, so we can't really say that they're totally loans, but essentially they're IOUs. So in essence, a bond is a loan. Right now that's at about 6%. Now let's look at Sri Lanka. Sri Lanka had debt at 13% from China. 13%. And if you look, they were never able to pay it back. When their economy started taking a dip, when they started having issues paying back the loan, what happens? China got a port. And they defaulted on their debts. And I don't believe that China is using debt trap diplomacy. I think that that's fugazi, whatever you want to say. But what China is doing is it's showing that it doesn't mind giving out debt at extremely high interest rates to then take over national industry. Now, some would call this debt trap diplomacy. They would say, oh, they're choosing countries specifically. No, they do this to all countries. They would do it to the US if the US took the Chinese. So it's really not diplomacy nor a debt trap, unless you consider the entire predatory loans that China is giving to be a debt trap. They're collateralizing loans on the basis of getting something in return for it. That's normal loan behavior. It's what you and I would do if we got a loan. And so when I hear debt trap diplomacy, I hear Western shill, realistically. However, of course, living in these different countries, it is hard to say that it isn't a little bit stupid that they are taking these loans. As in Georgia, for instance, you do have very high GDP growth. However, if you look at the growth of debt, which is at about 3% per year, and then additionally the inflation rates, and then additionally the lari, all three of those things cohesively combine to make the foreign exchange rates poor. Now, they've been selling foreign currencies en masse since 2022, and since realistically they started the war in Ukraine. And they did this because they got a bunch of money from the Russians. And when you look at how that was spent, it was spent very poorly. They have a half-finished metro line to Tbilisi airport. They have hundreds and hundreds of unfinished projects here. And this is what you should be looking at. Not the headline GDP growth. It's useless. What you should be looking at is how the money is being used. And if the money isn't being used well, and realistically, a half-finished metro line to Tbilisi airport is still reflected in GDP growth, then you know that the economy is structurally flawed and they're just borrowing time until they collapse. And truly, I don't want Georgia to collapse. I love this country, I do. However, what I find to be uniquely strange about Georgia is that no one seemingly understands that headline GDP growth does not mean a structurally good economy. And where I spent time here, I saw this firsthand. And I sold most of the apartments before the crash. And actually, real estate is overheated in Georgia right now. And prices are crashing. Liquidity is near zero. When you look at an economy, you do not want real estate, especially since often there's unfinished apartments, which again, look at that, unfinished, which again adds to GDP growth, but it doesn't make productive use of anything. And this is the problem, because if you are not having productive GDP growth, if you're not having productive industry growth, then you are essentially killing your economy very slowly. And we'll see within the next 10 years how Georgia fares. I think that if in the event the majority wins against Georgian Dream, there will be a huge restructuring of how government operates. However, what is the actuality of the country at the end of the day is that it's buying borrowed time. And of course, there is some productive capacity. However, it isn't being used. And so if you are looking to find the next productive economy, if you are looking to outsource to a productive economy, if you're looking for a way to avoid places that are running on borrowed time, then feel free to contact me down in the description down below. There's a Calendly link for 15 minutes, absolutely free of charge. If you like this video, feel free to like it. If you really liked this video, feel free to share it with your friends. If you are looking for the foremost best place to learn about internationalization, globalization, second presidency, second passports, feel free to subscribe. This has been the Travel Report, signing off.